Hello, everyone. Today, I wanted to go over the little table I created for the 1-2-1 trade and show you how it's used in action. And this is the one right here. I shared it before, but I just wanted to go over how it's actually used in practice. So let's take a look today, actually live trading, what's going on right now on Friday. We start by selecting a 9 delta that pays us around $20 or more. So if we go to 69 DTE, we'll see that only pays $16-17. So that's not enough. We're going to go further. We're going to go to 83 days and go to 9 delta. So we are right there roughly. So just for the purposes of the video, let's go one above to 3,900. So let's take a note at 3,900, and it pays $21 each. Then let's see what do we have available in shorter expirations, and see how we might select the PDS DTE. So starting at 86 DTE, 83, I'm sorry, 83, we can see here that ideally we would be looking at 49 DTE. First column shows the naked puts DTE, and then the next column shows the optimal DTE for the naked for the PDS. So given that we don't have the 49, we go to the next closest, and I would just add minimum being 50%. So anything under 41 2 days would be too short, so we're not going to look at 38, we're going to look at 56. So now if we go 83, and let me do this here. So if we go 83 days minus the available 56, just a second, minus 56 gives us 27. So the difference is 27. And then we go look at the third column here. And this is right here, as you can see, 27. And it tells us here that that would require 23% off of the premium collected. So given that we know that the premium collected was going to be 21 times 2 equals 42, and then times 0.23. So we're looking to spend roughly 9.5 or so for the PDS. So let's see what that might look like. Let's delete this for the moment. Let's go to 56. And we said 9.5, so the naked puts were at 3,900. So let's start looking at around 100 above that, so around 4K. So look for 300 wide spread. So let's say right here. So that would be 1,500 or 300 spread. 1,500 total here, and then $9. So we can spend a little bit more. So what we can do is either stretch it a little bit, for example, like this, stretch it, or we can just move the whole spread a little bit higher, right? So 3,700, sorry, 3,700 for that. There you go, 9.5, right? So now that we know that, we can go back to the 83. And we said it was a 39 strike. And then let's just do 2 of this. Okay. So now we have the whole trade, and we can take a look at and note some of the trade profile, right? So we're using 780 roughly in buying power. Let me just make sure that this is all good. Yeah, well, okay. So we're using that the whole trade is giving us 0.14, which would be just a second, 0.14 times 50. Oops. times 50 would be 7 delta, SPY weighted delta, and then we have 0.6 in just a second, let me this delete, and 0.667 times 5, or just over 3 in theta, 3.3 in theta. And actually, I'm sorry, I forgot, you can see the delta right here, the SPY weighted delta 6.9. And let's look at the risk profile of this trade. This is showing all of my trades, but let's just go here and take a look at what we've selected. There you go, 1, 2, 3. So let's look at it first today. So this is what it is, right? And we call it 1-2-1 because it ends up being the naked puts end up being in the middle of the put debit spread, and so it goes 1-2-1. And what this gives us more protection to the downside in case of a larger pullback versus the 50 wide put debit spread, because that put spread credit spread would only pay around 200 max. So let's just take a look and see what happens roughly, let's say in a week, and assuming that the volatility goes up a little bit. We're looking at 84 and 56. Let me see, 84. I think actually it's this one here. So let's assume a 15% increase, which is significant, but certainly possible given how low we are right now. It could easily spike to that level, and then the 56 would roughly the same. So what would happen? We would obviously start losing money, but we have some ways to go before we get concerned. If you take a look at here and take out the, let's say, for example, if we were at, let's go roughly at 4,000, right? So here we would be losing just short of 1,000. But if we take out the put debit spread, and assuming everything else being equal, we would be at 1,500. So the put debit spread is providing roughly $500 in protection. And this is the power of the 1-2-1, because it allows you to take a little bit more beating before you have to do something. My rule of thumb would be roughly to get concerned if we're down 5 times the naked put premium. So that would be, in this particular case, if we collected 21 or let's say 100, 110 for each, so that's 200 and change times 5, around $1,000. So that would put us roughly in this particular scenario, that would put us here at 4140. But then if we add back 4140, 4140 roughly, yeah, so we would be looking at $600-700 dollars in loss. So we could then start deciding whether we want to do something or not. And obviously the older the trade is, less it's going to hurt. So if we take a look at if we put together one of the older trades I have, you could go further out in time, but we'll do that in some other video. I want to keep it here. Let me just go back here, delete this, and quickly go over all of my trades. There you go. All of these here are the 1-2-1s, except right here we have some like 3 smaller call credit spreads. They're all in the money, they're all losing money, but they're providing some negative delta, and I don't mind losing money on them. It's a small portion of the overall credit received, and they provide nice balance. So should we pull back in the next week or so, they would cushion some of that increased volatility risk. And let me just show you here what it looks like. There you go. So this would include all of the trades, and you can see that we look pretty good all the way to 2.5 standard deviations. That this is obviously at expiration, so it's not very reliable, but it's always nice to see. I like to see green all the way past the 2 standard deviation, although I wouldn't put too much faith into this because it combines different expirations, and who knows what would happen anywhere in between. So just like a little snapshot, but not very useful for risk purposes. And I think that would be all for today. This is my first video, so you know, give me a like. Don't judge me too hard. I hope to improve. I hope to be doing updates and some live trades and account updates, portfolios, performance. We'll take a look at that as well. And maybe just to show you quickly, this is the journal I keep, and this is my Greeks tab. Well, I'll go over that. I keep track of lots of different things for analyzing, but not everything is needed for everyday trading. But for example, on the right hand side here, I'm keeping track of changes in buying power, change versus change in VIX day to day. There's not much changing in VIX, but let's say that if this VIX spikes from 13 and change to 16, I want to see what that did to my buying power, and then track it over time and come to some conclusion possibly that would then allow me to maybe fine-tune my maximum buying power used at any given time. But I'll talk more about it as well. Here are the actual trades. Again, I keep lots of data, but not everything is needed, but we'll break this down. And it gives me here a quick snapshot as to what is the minimum what goal of how much the naked puts should decay, or how much the minimum profit would be for me to keep the 50% of the original collected. So 70, 75, 70, 80, and that depends obviously on how much money we spent for the put debit spread, which is right here expressed in percentages. And then we have some calls. This is how I figure out how much to spend for call credit spreads, and I'll go over that as well into more details. And then the performance page, I keep track of these trades from last May. Back then I wasn't doing 1-to-1s, it was mostly 1-1-2s. But then I did some changes, and that trade evolved into 1-to-1, and that's last few months has been 1-to-1. And then I also have here performance year to date, and everything is indexed to 100 so that I can keep track easily, even if I add more deposits or take out something, and it keeps it nice and easy to monitor. And then I have a graph here. The bottom one is for the left side for the whole year of performance, and as you can see, it's going nicely steadily. Actually, variance is smaller than it would be on the SPY, which would be here on red. And then year to date, the SPY beats me a little bit, but I'm pretty sure I will catch up as soon as the SPY market starts pulling back a little bit. But again, this is something I will go into more detail as to how I keep track and everything. But I think that would be all for today. Thank you very much, and I'll see you in the next video. Thank you.